Hello, folks. This is Brandon Chapman with you today. It's another TheoTrade video for December 1st. Folks, this time we have a scenario playing out overnight that's causing a minimal amount of weakness in the S&P 500. The S&P is basically flat on the session, down 0.4%. Not a ton. We're kind of weakening as the trade continues to go along into the close today. If we can bring up a 1-minute chart, we saw a bit of a slide here. We're consolidating now. So giving away some of the intraday gains in the S&P 500, of course, utilities experiencing the most weakness on the session, down over 2%. And so we're kind of looking at the current situation in the market. We're wondering what's next. And as we look at the big drop today in Bitcoin as an example, Bitcoin's down nearly 6% from Friday's close. We look at the bond market. We'll just use TLT as a proxy, down nearly 1.5%, which is certainly causing some pressure in utilities as it's an interest rate sensitive product. But it makes you wonder, how are traders addressing the weakness we're seeing in bonds and Bitcoin today? And this is where it gets interesting. And so as I bring up the Ghost Print Surveillance Console, and I'll just kind of clear out the filters here. There are 1,284 different option trades that are pre-screened using the console, using some background criteria. But one of the things I like to do is create a block trade. And so we're looking for trades that were over 1,000 contracts in one print or one trade. And we kind of see a few things kind of pop up here. Number one, TLT calls, buying the 94 calls, 26,000 contracts. As we click on the location, you'll find that, again, earlier today wasn't as many. We're working on working on a screen for this, but 15,000 and 6,600, that was filled at the exact same time. And that was filled at the ask, or actually above the ask at that point in time. So we're seeing some heavy call buying today in TLT specifically, despite the big drop. And we'll kind of get to maybe why that is here in a second, but 94 is way the heck up here. Now that gives you plenty of time to reach that. But again, that's a pretty bullish scenario playing out. Now, what is the possibility as to why we might be bullish on bonds? Is it possibly that maybe that the Fed might cut rates? Well, so if we look here, for example, let's go to Forex Factory right here. For example, on the 10th, the Fed is expected to announce, and right now we're pricing in rate cuts. And so I'll show you, this is the Fed Watch tool. I'll reset this, reload it. But what you'll see is that for December's meeting, we're now at 85%. Now, if you looked at this on Friday or last week, a week ago it was around 30%. And so what we've seen is that we've seen this shift. And let's go back and look at the chart here of the S&P 500. We've seen this shift, where we thought, okay, we're going to cut rates, okay, in December. Now we're not going to cut rates. Now we're going to cut rates. We've seen this back and forth action in the S&P 500. We've seen it in gold. If I bring up GLD here, this low on August 22nd, that was the big shift in Powell's sentiment articulated in Wyoming, in Jackson Hole, basically saying, hey, we're going to focus on jobs as well. And we're kind of leading into rate cuts, right? So that led this massive sell-off in the dollar, massive strength in gold up until the peak here on October 20th. And we've kind of backed off here, seeing similar back and forth action as we've kind of shifted based on the Powell's statement at the last Fed meeting. And then, okay, we're going to cut rates. Now we're not going to cut rates. Now we're going to cut rates. We've seen this back and forth trading action in gold as dollar strengthening and weakening based on what the Fed is, kind of what we're anticipating the Fed's going to do in terms of rate cuts. Well, this has had a very direct effect on the US dollar, right? So for the US dollar / JPY, there's been points where we've seen a little bit more volatility, like back here on the 10th. We saw a scenario where the market's kind of weakening a little bit. Let's look at SPX. Where is the 10th? The 10th is right there. That was a big down day. Well, where did that come from? It seems like it came out of the blue. But what we saw was that at the time, the Japanese yen was strengthening. We're starting to see some issues. Is the Japanese yen going to be sound? Are some of the issues they're having there in terms of inflation? They have a new prime minister. They have a new government per se. They have maybe a change in policy ahead, trying to deal with some of the inflationary pressures. And if I go back here, what you'll see is that they're scheduled to announce their meeting on December 18th. We're going to get their policy rate there. Now, again, it's probably December 19th in Japanese time, but December 18th, our time, our date. And so we're seeing that right now we're kind of in this position where we're kind of waiting to see, is the yen carry trade about to get blown up? Well, that's led to significant strength in US denominated assets, right? So the US dollar denominated assets, because why? You borrow in yen terms, you convert to dollars, you buy US assets. Do you think some of that might have spilled into the Bitcoin trade? Today, Bitcoin's down 5.8%. Do you think some of that trade may have spilled into bonds? And today we're down 1.6% in bonds. Is there a chance that this may continue? I mean, looking at the price action, you got a high, a high, a high. Looks like we have kind of a head and shoulders type formation, 88 to 92, which suggests what? About a $4 move to the downside, which would carry you back to 84. Are we in jeopardy here of possibly going down to 85, 84? Absolutely. It's potentially in the crosshairs. But this is also pricing, and we're assuming that the yen or the Bank of Japan may start to raise rates as we're cutting rates in the next meeting, making that interest rate differential come closer together, which would cause pressure in the yen carry trade. But there is, for all intents and purposes, the possibility that these products may be oversold for today. So as we look at some of the activity that's occurring on these products specifically, again, we're going long TLT. What else is in here? MSTR. This is the February 20th, 165 calls. Now, this is being rolled down from an out of the money strike price that's out there for the December 270. And so we're selling the 270s. We're buying the 165s here. What does that mean in terms of MSTR? Well, let's take a look at the price day in MSTR. And what you'll see is that 270 is way out of the money out here. Now we're moving it down around the at the money strike at 165. So in essence, what we're seeing is the selling in Bitcoin or Bitcoin related stocks like MSTR. There's this sense that, hey, we're rolling down these calls at a point that we're kind of expecting the market may rally in Bitcoin after today's sell-off. Now, you might argue that this roll down might be a hedge. Sure, I'll go with you on that, saying it is a hedge. But guess what? MSTR is the product that they use to hedge long and short Bitcoin positions. Where else do you do it other than here? Where else can you trade 23,000 contracts in one trade? But notice this is a very, very hefty debit, selling at 40 cents and buying at 23, extending the time, lowering the strike price right now today. So if you're short, you get a big drop in Bitcoin like we've seen. Is there the chance that we get a bit of a reversal here, maybe testing prior highs before we head lower? In the near term, as we're leading into a Fed statement, is there a chance that Bitcoin is oversold? Maybe Ether is oversold today on its 9% decline. Well, let's go back to the console here and see what's happening. So again, we'll just bring up Ether to make it simple, and I'll just reset all the filters actually and say Ether. Now, in Ether, there's a number of trades today, and we want to focus on stuff being bought because that's the only relevant trades. We're having a trade come through right now on the put side with regards to Ether, but we did have a decent trade here, long calls at the 23 strike for December 19. We also saw for December 12th, 2,600 at the time. Most of it bought in two trades. These 21 calls on Ether. Again, we're seeing some puts come in here too on the downside. We're seeing some mixed trade now in Ether compared to where we were just a few minutes ago. But the point is that we're seeing an opportunity where they are reloading, right? We're reloading to the upside off of these oversold conditions. And I guess it kind of makes sense. The Fed is likely to accommodate next week. Is there a chance in hopes that we get kind of a Santa Claus rally? Do we see some of these kind of ease back upward? And then we're going to get some of the news next week on Wednesday, the FOMC statement. Well, what's the Fed going to say? Well, they're expected to cut rates at an 85% probability, but that's not really the wrinkle here. The wrinkle is, what's the expectations beyond December? Are we just pulling forward the notion that we're going to cut instead of in January, we're going to cut in December? Well, if we look right now in December, we see an 85% chance we drop to 3.5%. What's the January probabilities here? Notice that in January, there's only a 22% chance of a cut in January. So what we're seeing is we're pulling forward those rate cut expectations over where we were just a little bit over a week ago. We're pulling it forward to December, but very little possibility or expectation now that we're going to cut in January. what do we really need to see a rally before the end of the year? We probably need to see that there's an expectation of ongoing rate cuts. Well, how does that fly in the face of the Bank of Japan? I mean, right now, the Bank of Japan expect to announce on December 19th. We'll get the news, 13, 14 hours earlier, December 18th here in the United States. But does the Bank of Japan raise rates? And this is where we have a really kind of a difficult point here. If the Fed gets too dovish, we may see a propulsion weakness in the dollar. But as we head into the Bank of Japan policy rate here, this may accentuate the strength in the yen if the Bank of Japan actually raises rates as the Fed cuts and is expected to cut further. So this places the Fed in a really, really difficult position heading into their meeting on the 10th. If they articulate too weak of a policy, we're expected to cut in December and January and on, this may put the dollar in a very precarious position, especially if at the same time the Bank of Japan is expected to raise rates. We've kind of come off the bottom here, but we saw kind of a warning shot across the bow on the 10th. This is another warning shot, not necessarily weakness manifests in the S&P yet, but we are seeing things soften going to the close here. But if this continues to strengthen, this could cause some rather significant selling in the S&P 500. And again, would you expect to see more weakness in Bitcoin? I would expect so, because what we would see is that it would see a weakness in risk assets. Bitcoin does fall into that camp because of the significant leverage there. But again, we are seeing some call buying, maybe because of some Bitcoin shorts wanting to use MSTR to hedge. We're seeing a little bit of bullish trade in ETH today. Again, is that reflective of strong sentiment? We got that last week in Riot and Mara. They're pulling back today, but they've already had the rally, right? They had the rally off the lows from 12 to 16 and a half. Mara had the rally off of the low down here at around $9.60 to about $12. Is there potentially more in store? Sure, it's a possibility. But in the near term, it's possible if the yen continues to strengthen, we see continued weakness in risk assets and spilling more over towards equity, maybe even to oil, for example, that's kind of up today. Energy is the top performing sector. In fact, the only positive sector, as we're seeing, negotiations still occurring in Ukraine. But the bigger bet probably is in TLT. So if you're going to go take that kind of like that dead cat bounce type trade, TLT seems to be the one that's setting up the best. It's possible, yes, as the yen sells off, they may sell treasuries to raise dollars, but more possibly, we might see more weakness in risk assets, selling in stocks, et cetera, AI, in lieu of a further strengthening in the yen. And we might see a defensive rotation off of these lows in lieu of Fed cutting rates next week in TLT. Now, how do you trade something like this? The good thing about TLT, if you're a spread trader, is that the volatility oftentimes is rising as you move out of the money. It's kind of shifted here a little bit. See, we're kind of falling down here. We're rising here on the put side. We're falling just a little bit out here to about the 91 strike or about the 30 delta. But there's not a huge difference. The question is, could you buy an 88 and sell a 90 spread? So let's go buy deep and wide, 1 month, 2 strike vertical, and you'll see you're able to get it for about $1. Not much edge in here. In fact, your break even's $89 and you're paying $1. So the pricing's a little bit off here, and 89 is basically today's high. You only need a move towards 90. We had a move towards, let's say, 89 and a half tomorrow on an in-out spread in TLT. You have a chance to be able to close this for a 30% gain if in the next couple of days we rally towards a little bit above 89, maybe 89.30, 89.50. You're out of this trade. If it goes beyond 3 days, if we go to Friday or beyond, you're following Don Kaufman's in-out spread rules, you're looking for about a 55% gain. You look to close this for $1.55 instead of $1.30. But the pricing right now is reasonable on this. So if we open up tomorrow in a similar area, this could be a reasonable trade, just playing an oversold kind of dead cat bounce in an area that if we see a significant risk off, this might be the one place that actually shows strength. And it will catch you next week on the video. Thanks.